Hi, I'm Jonathan, York Bay Financial Partners, looking at investment markets. Certainly still a pretty nervous time over there in the US. You've got sort of rising interest rates, still talk about the Fed potentially increasing interest rates yet again, but also as well hanging over the market by the end of this week is a potential government shutdown. Certainly on the government shutdown, the sort of hardliners and the GOP really are playing hardball there, and potentially looking at closing down the government at the end of the week. It really sort of boils down to petty little squabbling still over the funding for the debt ceiling. But really, while they might just grab a few headlines in the sort of near term, potentially the long-term damage for the US economy could be pretty major. But adding to sort of worries as well, new home sales were down. They sort of missed their targets. Consumer confidence was down as well. That was around 103 versus 108 last print. So really a pretty shocking month for equities. The S&P is down around sort of 4%. The Nasdaq sort of high-tech indices is down over 6%. But really, the Magnificent Seven really casting a bit of a sort of distorted shadow over the US indices because for the overall performance this year, they account for around sort of 85–90% of the increase. So when you strip those 7 shares out of the market, the market hasn't done really that much this year. But again, what is quite interesting out there, the big sort of investment houses haven't really revised down their year-end targets for US stock indices. Now, on the back of that, as interest rates are sort of nudging up all the time in the US, that 10-year is now at its highest level since around 2007 at 456. 2 years sort of around 512. Now, when you throw into the mix as well the ongoing sort of potential sort of strikes in the US as well, really does look a pretty sort of nervous and uncertain time for the next sort of 2 to 3 weeks. Although one piece of good news on the sort of strike is that the strike with the Hollywood writers out there looks like it's been resolved, and they will be going back to work in the next sort of week or so. So against this backdrop, will the Fed still look to increase interest rates? Inflation is a little bit sort of stubborn out there, but really being driven in the last sort of month or so with the sort of slight increases out there, really being driven on the back of energy prices. As oil is up over 20% in the last sort of 4 to 5 weeks. Really quite interesting for the Fed, leaving rates on hold, but also as well, if you looked at the sort of dot plot now, they're now predicting a couple of less cuts next year. They're still keeping the target range of 525 to 550. So oil's still hovering around that $90 a barrel. Potentially as well, there could be a further little sort of issue there with Russia has come out now and said it's going to sort of put a ban on exporting diesel. Now, supposedly that is to try and sort of calm the domestic markets, but again, potentially it's sort of Putin just turning the screw out there and trying to cause and inflict as much pain on the West as possible. And that's really on the back of obviously his total humiliation over the war in Ukraine, which was supposed to last sort of a couple of weeks. We're now dragging into sort of 18, 19 months down the road, and still no sign of a resolution in that dispute. A little bit better news on the UK inflation front. That was actually down in the last print there, 6.7 versus 6.8. So, only a small sort of reduction, but a reduction nevertheless. And core inflation was 6.2 versus 6.9. Now, it was a pretty tight vote at the last Bank of England meeting, 5-4 to keep rates on hold. So potentially, if we can continue to see that inflation print falling, potentially we've seen the peak of UK interest rates. Now in the EU zone, German bonds have now just ticked over that 2% level. That's pretty major. But on the slightly more positive side, the sort of weather disruptions to the European economy seem to have sort of abated slightly, and still seeing some good tourist numbers going through there. But obviously, as we head into those sort of winter months now, it's just going to be interesting to see how energy prices hold up. Now in Australia, the Reserve Bank was a pretty tight call as well at the last meeting there, and there was potentially some talk about a potential rate increase. But again, with inflation seeming to be under control and certainly much lower than sort of global partners out there, the Reserve Bank chose to left rates on hold. Now potentially Australia is facing another sort of issue with unseasonably warm temperatures for the early part of spring. Potentially that sort of moves the sort of fire warnings and potential for sort of wildfires a little bit closer. But again, the Australian economy looks in pretty reasonable shape. They're seeing certainly some good migration numbers out there, good tourism numbers, and the economy is sort of pushing along at a pretty reasonable rate. Now here in New Zealand, the latest GDP figures were a little bit on the sort of surprise side, at plus 0.9 for the June quarter. But more importantly, the December and March quarter was also revised up as well. There were still negative numbers, while March was revised to sort of flat from down 0.1. So technically, New Zealand didn't go into a recession because it didn't see two negative quarters. Also as well, a little bit of positive news out there for the farmers. The latest sort of dairy auctions were actually up in terms of price and volume. A little bit of movement out there as well on the mortgage rates. Kiwi Bank has sort of just nudged up a couple of its mortgage rates. But on the flip side of that, they've also nudged up their sort of TD rates as well. Now the election getting ever closer, and overseas voting will be able to start on Monday. But interestingly, the latest opinion poll poses really a little bit of a dilemma out there. National now only have 60 seats in that latest sort of poll, and potentially we need New Zealand First to be able to form a government to get them over that line at 61 seats. Block of Labour, Māori and Greens will still only have 54. And as Labour have ruled out of working with New Zealand First, it really does sort of paint a little bit of a precarious picture at present. We've still got a couple of weeks to go from this Saturday before Election Day. Much can change in that time.